The US dollar continues to rally. This puts pressure on US stocks, which are close to testing important support levels. Bonds have already taken out their support levels and they are sending yields rapidly higher. Bitcoin remains above an important level in the 18,000 area, and it could be setting up for another rally within the trading range. As it's the last Tuesday of the month, we'll be looking at seasonality for sectors and see if we can find some alignment with the actual rotations, which, by the way, seem to be returning to normal, if there is such a thing in sector rotation. Hello sector watchers, welcome to the show. This is the 146th episode of Sector Spotlight for Tuesday the 27th of September, and I'm recording it on Monday the 26th. My name is Julius de Kempenaer and I am presenting to you from Amsterdam in the Netherlands. Ladies and gentlemen, this is Sector Spotlight. Let's start with a quick overview of what's happening in asset class rotation. On the left-hand side, we have the weekly RRG, and on the right-hand side, we have the daily, which gives you a little bit shorter-term insight. If we start on the weekly, that gives us the big picture. Then there is one tail, or, well, actually three that are really standing out. And the one that I want to get rid of, because it's distorting my picture, is that one for Bitcoin. It's a long tail, it's improving, it's inside the improving quadrant, so the relative strength of Bitcoin versus VBINX is continuing to improve. And so are both tails for commodities, DGP and GSG. They're inside the lagging quadrant, but they are clearly starting to pick up relative momentum. Still in a relative downtrend versus VBINX as it is, but we'll see on the right-hand side when we move to the daily RRG that there is definitely improvement going on for commodities and to a lesser degree for Bitcoin in the short term. So I'm going to get rid of Bitcoin, or the Bitcoin tail right here, and fit that on my image. So now we get a better handle on what's going on in the remaining elements of that universe. I'm going to do the same on the daily, because here you can see that Bitcoin basically today has turned down. Let's say Bitcoin is super volatile, and we compare it to a very broad-based stock bond balanced index. So that usually gives you some jiggly lines, and that's exactly what's happening here in Bitcoin. This can change overnight. So I'd rather stick, more important for me is that tail that's on that weekly RRG moving into the improving quadrant. And for the time being, I just watch the general direction of that daily tail, and that's still moving to the right. And even if Bitcoin is going to turn down and rotate through lagging, there is still a very good opportunity that it is going to be a very rapid rotation, and it will continue to move higher inside the improving quadrant on the weekly RRG. We'll look at the individual chart for Bitcoin in a minute, but I'm going to move it off my screen here and fit it so we can concentrate on the other rotations. Because what we see is that I think we can take a quick shortcut and just conclude that the US dollar right now is probably the strongest asset in this universe. You can see that it's inside weakening on the weekly RRG, but it's starting to curl up, signaling that it is potentially starting a new up leg in an already rising relative trend. And that is definitely confirmed by the rapid rotation on the daily RRG, where we see the US dollar tail rapidly rotating from weakening back into leading at super high readings on the RS ratio scale, which as well on the weekly is on a high reading. So both on the weekly and the daily RRG, the US dollar has got the highest reading, making it the strongest asset in this universe. If we move to the more, traditional, more important, whatever you want to call it, then we see that last week was definitely a good week for fixed income and a bad week for stocks. That is reflected in the tail for SPY that is rotating from improving back to lagging, very clearly signaling that deterioration of stocks versus bonds. We also see DJP and GSG moving in tandem back into that leading quadrant. potentially signaling a pickup of relative strength for the commodity markets, for DJP and GSG, which are inside the lagging quadrant from a longer term perspective. But we've discussed it many times before. The total commodity market is I think, is in a very long turnaround mode, a very long turnaround situation. And what we see right now are shorter term rotations that are, in this case on the daily, underscoring the strength of commodities going on. Is they're definitely picking up relative strength again. If we go to the stock market, to SPY and the fixed income asset classes, then you can see here that SPY is moving into lagging, and you see that those three fixed income asset classes are continuing their strengthening move into the leading quadrant. So we got corporate bonds here, we got high yield here, and we got government bonds here. And this is the interesting situation because, as I said in my intro, stocks are approaching, testing an important support level. Bonds have already broken their support level. And this chart shows you that the decline in stocks is going faster than the decline in bonds. And that is why bonds are picking up and going into the leading quadrant, while stocks are going the other direction. They're both going down, but stocks are just going down faster than bonds. And that's the whole concept of relative strength. If we bring that to the weekly RRG, then, let me blow that up for you, then we see that SPY has already started to roll over while inside the improving quadrant. That's usually not a very good sign. Just like the rotation for the US dollar on the right-hand side is a good sign, the rotation for stocks on the left-hand side is a bad sign. Even if we hit that leading quadrant just for 1 week, it still remains a tail that is rolling over pretty much on the left-hand side of the chart, which signals a continuation of a relative downtrend, which is already in place. So we're signaling the second or the third leg in an existing relative downtrend versus VBINX, which, by the way, is also breaking support levels. VBINX, our benchmark chart, is breaking support levels, which I think is not a good sign, because it means that all our asset classes, which in this case stocks and bonds, because they are inside VBINX, are moving lower and breaking support. Let's move to a few of the individual charts, and let's kick off with the US dollar, because I think that is a very clear chart. This one is on a roll and it's really pushing higher. And this is the weekly chart that I've been using here in Sector Spotlight, but I really need to go to a monthly chart to find any historical references. And when I do that, you got to go back to the early 2000s, to 2000, 2001, 2002, when these highs were made in the 120 area. That is potentially the target for the dollar index. If we translate that to euro dollar, then we can clearly see that support around 99 cents has been broken. We're on the way down, and here also, this is a weekly chart of euro dollar. I really need to make this a monthly chart to find any historical references. And when you do that, you get back to those, obviously for DXY, those are highs, for euro dollar, these are lows. And you'll see that they're in the, between 82 cents and 85 cents, and there was a little bit of a consolidation here in the early 2000s. So this area here, it's very hard to pinpoint it to a specific level, I think is an important area to watch. And this could be the target for the euro-dollar exchange rate. Another thing that points to that area is if I simply take the range that we saw in euro-dollar since 2014, which is, let's round it off at 104, 105, 125 on the upside, which means 20 cents, 20 big figures in euro dollars projected below, let's say 105, that gives me 80 cents as a target for the euro dollar rate, which would be the low end of that range. That is still a massive decline for euro dollar and a lot of strength for the US dollar. So let's keep this in mind. Obviously, that's probably not going to go in a straight line, but the downside is the ease of movement right now, and the upside for euro dollar is going to be very, very difficult for the foreseeable future, I guess. Quickly go to the stock market. We talked about that 360 level a few times. I think that's now coming into sight. This is Monday's trading, and I'm going to watch 360 this week. If we break below 360 on the Friday close, then obviously that's another confirmation of the current weakness in the stock market. And the next area of support, there is a little bit around, let's see, 345. But the big level is probably around 310, which is another significant leg down. And if that breaks, it ain't over yet. If we go to the daily, then you can see that in more detail. And again, I'm using the same wording as I've been using the last few weeks. The upside for SPY is littered with resistance. It's going to be very, very difficult for the stock market to move higher in a straight line from current levels. I don't see that happening. Move to IF. Here you can see that break in bonds that we discussed. This is a very serious and very clear and clean break, sending rates higher. Also, this is not going to change anytime soon. The upside is going to be very difficult, which means that yields are on the rise and very likely, aside from some little corrective moves, that's going to be a trend that's in play for the foreseeable future. Bitcoin is a little bit different. That 18,000 level is still in play. It's still holding up. And the longer it's in play, the more important it's going to be. And you can see that there is a potential positive divergence building up on that weekly chart for Bitcoin. And if we look on the daily version, then we can see that in more detail. As long as we hold here, this is probably, and you gotta, if you want to trade it, please use very tight stops. But this could be a tradable move from current levels back up to, this is 22.5, but the real upside of the range is around 25. My longer term view for Bitcoin, still pretty weak. I'm looking at that very big double top formation that we completed. But in the near term, this is probably a tradable move back towards the top of the range until we break below 18K. Then all bets are off and the ease of movement is to the downside. As usual, on the last Tuesday of the month, we'll take a look at seasonality and seasonal performance for all sectors and see if we can find any alignment and potential investment opportunities based on this phenomena. If we look at the column for October, and that is this one right here, and let me see if I can highlight that for you for a minute. That's this column here. So we're looking at the month of October, and these columns represent the percentage of months that this sector has outperformed the S&P 500. So we're looking for either very high numbers or very low numbers. Very high numbers give us a good sense of the possibility that the sector is outperforming the S&P 500 in this month, and a very low number sends us the message that this is a sector that is usually underperforming the S&P 500 during the month of October, which is also strong information. And we do have both to a degree. The energy sector, in 35% of the cases, outperformed the S&P 500. So it means that in 65% of the cases, the energy sector underperformed during the month of October. It's not massive, but it's one of the lower numbers in this month. A real good sector traditionally is technology. At 75% of the time, the technology sector outperformed the S&P 500. That's a significant number, 75% of the months, 75% of the months since over the last 20 years, technology outperformed the S&P 500. And on the other side, we have healthcare, which in 30% of the occasions outperformed the S&P 500. But that means that 70% of the time, healthcare is underperforming during the month of October. So we got energy at 35, we got technology at 75, and we got healthcare at 30. Those are the numbers that make me alert that's something that I want to look at. When we look at the actual performance or the actual relative performance during those months, then we go to the second graph and we can see that energy during the month of October on average underperformed the market by 90 basis points, 0.9%. This sends us a message that traditionally, on a seasonal basis, energy is not the best sector to invest in during the month of October. Technology, on the other hand, as I said, 75% of the time this sector outperformed the S&P 500, and the average performance, the average outperformance is 1.5%. It's the highest of the whole month, and it's actually, in the whole table, it's a really high number, 1.5%. So based on seasonal pattern, we can expect a really strong month for technology, and I'm going to be interested to see how that works out on the chart and on the RRG, which shows you the actual rotation. And then finally, we have the healthcare sector, which in 30% of the cases outperformed, so 75% of the times it underperformed, and the average underperformance for the healthcare sector is a full percent. And that's interesting because we have, on the one hand, we have technology, which on average outperforms 1.5%, and in 75% of the cases it is doing that. And then we've got healthcare, which on average is underperforming the S&P 500 by 1%, by 100 basis points, and it's doing that in 70% of the time. So based on seasonals, one would expect a strong month for technology and a weak month for healthcare. Let's see if we can find some evidence, if we can find some alignment in the actual rotations for sectors at the moment. And now for the real thing. Let's see what is actually happening in sector rotation. Looking at the weekly RRG, and we discussed the rotation of defensive, offensive, and especially the role of consumer discretionary over the last few weeks, how out of sync, out of order that was in relationship to the weakness in the market. And as you can see, we now see the tail of consumer discretionary coming down inside the leading quadrant. It's starting to roll over. And if we look at the daily tail for consumer discretionary, we see that is returning into the weakening quadrant and starting to head for lagging. So it looks as if consumer discretionary is now also, how shall I say that, surrendering to the current market weakness and getting back to its expected rotation given the weakness of the market in general. Let's see if we can find some rotations that are aligning with the seasonals that we just discussed. Let's go for energy first. If we look at the energy tail here, it's inside weakening but rapidly increasing on the JDKRS momentum scale. It's picking up relative momentum quite rapidly. If you look at the daily, then we're inside the weakening quadrant as well, still losing on both scales, but we're still quite a distance away from crossing over into lagging. So there is still, very well the possibility that this turns back up and comes back in sync with the weekly tail. Now remember, seasonality showed us a relatively weak outlook for the energy sector at the moment. And if I bring in the price chart for energy, then I can see some weakness. I mean, from a price perspective, it's definitely possible that we can drop here. But it's definitely not one of the weaker sectors in this whole universe. So I'm not entirely sure whether the seasonal expectation actually plays out in real life. For that, I would like to see a weekly XLE tail that is actually moving towards the lagging quadrant. So I'm not entirely sure whether that seasonal pattern for the energy sector is actually going to pan out this year. The second sector that we saw on the seasonals was technology. And if we look at the technology tail on this weekly RRG, then we can see that it has rolled over inside the leading quadrant. It did quite well for a little bit, and it's now rolling over, moving towards weakening and potentially moving into lagging. If we look at the daily tail, then you can see some improvement there. So this is a bit torn because technology is expected to be the best sector this year in October. From a seasonal point of view, 75% of the time, 1.5% point outperformance. And if you look at the daily, then you can say, hey, that is definitely a possibility. If you look at the weekly, not so sure. And the interesting thing is, if we go to the other sector, which is the opposite, which is the healthcare sector, then we can see that it is inside weakening and starting to slowly pick up. And if you look at the healthcare tail inside on the daily RRG, it's inside leading and starting to pick up. So this is supposed to be the weaker sector of the two, and it's confusing. They're not aligned, and so there is no real strong alignment of nor for the technology nor for the healthcare tail. And if we look at the individual charts, then technology is resting at support. Now try to think with me. Technology from a seasonal perspective it has a positive outlook. I could think that if support holds, we can see a little bounce. And this is a weekly chart, so 2, 3, 4 bars up from a support level would not be strange. That would be in line with a strong seasonal. If you go to the healthcare sector, then you can see that it has just broken a support level. So from a price perspective, it's very well possible that this drops down a little bit, like 2, 3, 4 bars. That could be the weakness that is expected from a seasonal point of view. Relative strength is absolutely strong for healthcare, and it's not that strong for technology. So my take on this is that it is definitely not very strong aligned from a seasonal point of view with the actual rotations. But if you're really looking for a trade, if you really want to do it, then I can see, and you need to be very tight on stops and management. I can see technology bouncing off this support level, going up a little bit, and I can see healthcare giving a little bit of a follow through after the break here and moving towards this support level at 118. That's a short-term idea based on seasonals. For the longer term, I really think that healthcare is on the way up, relative strength is increasing, and technology is still sending us some very negative signals. And if technology breaks that 120 support level, it's definitely going down further. Let's quickly go over some of the other individual sectors. It's especially the offensive stuff that is sending us some negative signals. Here is materials that is inside the weakening quadrant, picked up some relative momentum over the last few weeks, but is now breaking below support and could be on the way to the area between 58 and 60. That's definitely possible, and that's going to send relative strength lower. Communication services continues to move lower, continues to move in its downtrend, and every time breaking support levels. Look at that relative strength, look at that tail. It's the weakest sector of the universe. It's moving further into the lagging quadrant, and quite frankly, I don't see any sign for improvement in the foreseeable future. Here you have real estate. We had that little bounce upward, but now it kissed that neckline, rapidly going down, just broke below the previous low, sending it even lower. Relative strength is breaking below important support, and that's sending that real estate tail deeper into the lagging quadrant. And now on the more defensive side of things, here is consumer staples. Let me highlight that sector right here. You can see that it's in weakening, but it has now started to curl back up. So it looks as if that stint through weakening has now come to an end. And we don't really see it on the price chart, but relative strength is pushing to overhead resistance. If this sector, and it can still go down, if it goes down less fast than the benchmark, if it goes down less fast than SPY, relative strength will go up and XLP tail will start to move into or towards the leading quadrant and act as defensive as we expected. And then here is healthcare. We already looked at it. This relative strength is moving higher. That is going in the right direction. And then here we have utilities, which came down off its highs after setting a new all-time high. It's now in a very important rising support area, and look at that relative strength line. It's pushing to new highs, or it's pushing above its previous resistance, and it's starting to pull both RRG lines back up. And that gives us the tail that we see right here inside the weakening quadrant, but pushing up right now, making utilities the strongest sector in the universe right now, underscoring the defensive nature of the market that we are still in. And that's it for this week. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. You can watch the show on YouTube or via StockCharts television or any of the on-demand channels. Next week, I'll be traveling to StockCharts HQ in Redmond, Washington to attend and speak at ChartCon 2022, which will be held and aired on the 7th and 8th of October. If you haven't already done so, please visit the ChartCon agenda and check out the great lineup of speakers, and of course, sign up to attend. There is a great discount for StockCharts members. If you are not a member yet, this would be a great time to become one and take immediate advantage of your member discount. I'm looking forward to see many of you as attendees at ChartCon 2022. And if you cannot make it, I'd love to see you back at the next episode of Sector Spotlight.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.